Hello. Today I will be speaking for Hamid Trades. He told you all that he was bullish yesterday when everyone else was extremely bearish. He shared with his Discord that he was long on multiple stocks. He was long SPY, NASDAQ, Tesla, Amazon, Apple, and NVDA. The proof is in the pudding.
You heard it. You heard it from him. Well, you guys knew that I was basically nibbling long. We were leaning a bit bullish in the past few days, and I was very public with that information. So clearly, the proof is in the pudding. Regardless of what people feel, regardless of what people think is going to end up happening, you take the best possible situation and you take the best possible trade in that moment. And thankfully, that's exactly what we're doing. So if you guys want access, once again, you click the link in my bio or down below. You'll gain access to the entire Discord where I share all of my trades, everything. The proof is in the pudding. I'm also most likely going to be starting a 5K challenge sometime soon. And in that challenge, we're most likely going to flip that 5K into a much larger amount. All right. Proof is in the pudding. You guys want access to all of these things, click the link down below. And let's get started with the rest of the video. We're going to be talking about the SP 500, the NASDAQ. Obviously, the move to the upside happened. How much more room do we have to the upside now is the question. And we're going to be taking a look at all of these things. And yeah, might just do a little victory lap. Who knows? Let's see. But regardless, hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. Let's get started with the video. So first and foremost, I'm going to go over 4 main reasons why I had a good indication, good feeling that we're going to be bullish and why this was a bit of a bottom. All right. So the first indication is we were looking at Apple stock. So this is a daily chart of Apple. And what we saw a few days ago on January 13th, right here on this doji candle, was we were very, very overextended to the downside on Apple according to its Bollinger Band. So the Bollinger Band is very, very important to monitor because it shows a standard deviation below it, right? Or it shows basically space outside of the standard deviation. And the standard deviation line is this blue on the bottom and this blue on the top. So anything above or below is not supposed to happen. So because it's not supposed to happen, there becomes a higher likelihood, higher probability that if we are outside of this zone, which shouldn't happen, right, there tends to be a bounce or a reversal back in. So Apple, right, it being reason number 1, Apple showed over the past few months, Apple was one of the strongest stocks, right? It was very, very strong. We were rallying on Apple. A lot of other tech stocks were not rallying as much, right? As you remember, oh, wow, was Apple going to break above 250? Wow, oh my God, now it's at 260. So that was on a lot of people's minds. And just remember, a few months ago, we were trading sub 200 on Apple. Now we are not, right? So Apple was one of the leaders. Because it was one of the leaders, when there is a very good buying opportunity, it becomes very, very important to go long on Apple. And that's exactly what we ended up doing. We went long on Apple on this day, and we've been holding ever since. So Apple bottoming out like this was the first sign, okay? Sign number 2 was Tesla. Tesla also showed a strength, and it started to bottom itself out. These 2 candles was basically Apple falling very dramatically and then bottoming out. So this is essentially where we went long on Apple. This candle right here on Tesla is where we ended up going long on Apple. So you could see, because Tesla was also one of the winners, right? We were long Tesla. Today, we actually went long Tesla below 413. So we rode the entire move up to almost 429, 430. But that was an amazing play as well. So now I'm continuing to be bullish regardless. But what I'm saying is this bottoming out formation where we saw some strength out of Tesla and Apple, you have to look at how the leaders, how the best performing, largest market cap stocks are performing. And if Tesla and Apple were both leaders and they're both showing good bottoming out opportunities, this becomes a good sign as well. So Apple and Tesla both painting really, really nice potential reversal candles was a very big precursor of why I began being bullish. Number 3 was the rally in the IWM due to bank stock earnings. So this week, and it just so happens, so this is the daily chart of the Russell 2000. The Russell 2000 has a majority economically sensitive stocks within its ETF. So there are a lot of banks. There's a lot of payment processors, things that are affected by the economy. So this week, right? So my point is, so now this is number 3, right? My point is that if you guys have been watching this channel, right, you guys would know that heading into tech stock earnings, for example, during tech stock earnings, there is usually an earnings run-up. So if Amazon, Apple, and Microsoft all report earnings the same day, what generally tends to happen is this is their earnings day, price of the stock starts to ramp up into this earnings day, and then we can either gap up or we can gap down. But what tends to happen is an earnings run up. Now, this week, almost all of the large banks in the United States are reporting earnings. BlackRock, State Street, JP Morgan, Wells Fargo, Citibank, a few others are all reporting earnings this week. Because the Russell 2000, the price increase or decrease in the Russell 2000 also affects the overall market, okay? It's a big player, right? So you have to realize that when there are a lot of weight, what occurs in the Russell permeates into the overall market. So this was another reason, reason number 3, that we were going to be bullish into this week, in my opinion. And that this was the third reason why, essentially, I was bullish. And then the last reason was the VIX. So the VIX, like I said, we have to always monitor the VIX. So this is the daily chart of the VIX, and let me tell you why it's so important. The VIX has a negative correlation to the market. If the VIX is falling, the market is going to be rising. What were we watching on the VIX? This is a bear flag formation on the chart of the VIX. Bear flags tend to be very, very bearish patterns, and that's exactly what ended up happening. This, because I saw that the VIX was bearish and the large tech stocks were bullish, it became very, very easy to be leaning long and think the market was going to go up, and that's exactly what ended up happening. And that was a bit of a recap of how we caught this move. So that's why it's so important to monitor what's going on every day, because if you aren't monitoring what's going on every day, not only do you miss the experience that you garner based off of doing these things like live, right? This is like an opportunity where you don't need to backtest something to see if it works. You would be doing it live, so you would feel what's going on. You would feel like it's like missing out on watching something. Like it's like missing out on watching an opponent fight live as opposed to just watching a recording. Like the feelings that you would feel, how the sentiment around you would be, how like aggressive bears or bulls and everything would be, it would be something that you would be missing out on. So what I'm basically trying to say is you need to experience what's going on. Like, for example, if you were to trade during COVID, all of these other crashes wouldn't mean as much, right? But then if you just started in this most recent crash or something, right, you wouldn't really know how to react because this would be your first time dealing with a crash, right? So that's why I'm saying having the knowledge bank of like, okay, if this occurs, there's a higher likelihood probability that we're going to go higher. So this is basically something that's basically what I'm trying to explain. If you watch multiple of these things all the time, every day, right, then you get a pattern of, okay, if this many of these things occur, then there's this much of a chance that we end up rising. So that's why using as many variables, having as much data, and doing as much analysis as possible daily and consistently is very, very important. And if you are already watching for this long, make sure to subscribe and like the channel. Now let's go ahead and talk about how much more room there is to the upside. So now what we're going to do is we're going to look at the large tech stocks, starting with the SPY, which is not a large tech stock. So the SPY, I'm just going to be very, very transparent. It needs to remain above 586, 585 area. So if we get a pullback to this area, it needs to hold above this very important zone for a continued move to the upside. Overall, this is a very, very bearish. This is an overall very, very, very bullish situation on the overall market. And just be very, very careful about trying to go short anything. You could clearly see that there's a lot of bullish momentum. We are, we're right at a trend line as well. Tomorrow is going to be very, very important. Obviously, like the trend line also coincides pretty perfectly with the 50% fib. 595 in general is a very, very important level on the SPY. So we are going to have to see if it continues tomorrow. But in general, this move to me is bullish. I think that we should hold this level of support and continue up. So far, we caught monstrous moves, and thankfully, they are working out very well. But there's more room to go. 600, 603 is still on the table, and based off of that, we could rally to 610. So there's a lot more room to the upside. On the SPY, there's a lot, the same concept on the NASDAQ. They need to hold these prior levels of gap for a continued move to the upside. The NASDAQ has room to 523 pretty easily. I don't see why not. And especially if the large tech stocks start getting a lot more love after bank stocks report earnings, the NASDAQ has a lot more room to go to the upside. And let's just go down the list of all the large tech stocks. Tesla, like I said, we caught Tesla below 413. We got into 415 calls. So this Tesla has room to go to 440, 450. Google has room to make new highs. It is clearly very bullish. It gapped up, held above the bearish below level. This is not a completely bullish setup. We could bounce around off of this, but regardless, all of these stocks are basically going to need to hold prior highs essentially in that area, or a bit higher for a continued move higher. Getting a bit of a pullback, getting a bit of a sell-off, some profit taking is normal. So I'm not expecting. This is the problem now. This is the problem now with trying to chase longs. Trying to catch the move after it's already happened starts to chop you out, because not only can, okay, wow, Google looks so strong. Oh my God, let's go long. What happens if tomorrow it drops $3? You buy more. What happens if it drops down to 191? What happens then? You probably sell it, right? And then after you sell it, it starts to rally. But what did you end up doing wrong? You ended up going wrong at the wrong time. If you did not enter long in this position and you first entered long on a pullback here, you would be way more adamant and more comfortable to hold if it drops again, right? But because you entered in up here at the highs, by the time the proper long opportunity shows, you're already too down on the position. And because, you have to adhere to a stop loss, which is a good idea, because you have to adhere to a stop loss, you get stopped out of the trade when the trade could have been a bounce. So that's the issue. That is the issue a lot across the board. Microsoft had a huge bounce. Piece of crap stock. Underperformer. Really, really nice bounce. Amazon closed above the bearish below level. Amazon looks like it has room to go to 226, 227. And NVIDIA, just was also one of the winners. We were long NVIDIA. NVIDIA just had a really large breakdown, and just worked out really, really well. NVIDIA has room to 140. AMD has room to 124. Like, all of these stocks, there's room to go. I wouldn't want to be short AMD here. I wouldn't want to be short NVIDIA here. I would rather be short NVIDIA up here after it's made a move to 140, 142. So, yeah, man, we caught a really, really nice move to the upside on all of these stocks. And honestly, the proof is in the pudding, man. You can't even, when I'm wrong, I'm wrong. When I'm, it is what it is. Like this morning, for example, we were long NVIDIA, right? At the open, by the time we opened, it was down 20%. So I entered another NVIDIA call. Like, we were down 20% on the NVIDIA call, but overnight our NASDAQ call was up 70%. Our SPY call was up 40%, something like that. So our Apple call was up 20%, 15%. So, okay, if NVIDIA overnight was down, the other stocks were up, and they were in profit. Overall, we were in profit. But because I saw that NVIDIA was still painting a very, very bullish picture, we might have sold preemptively, right? Because NVIDIA was showing a very, very bullish picture, I had to re-enter. And for all the people that didn't sell, they're comfortable because we had 135 calls and we closed at 136. So this morning we bought into 134 calls. So can't make this stuff up. Can't make this stuff up. And yeah, swing trading just becomes so much easier, and it's just easier in general compared to day trading as well. If you really get good at swing trading, man, it makes trading so much easier and comfortable, and that's honestly it's like a comfortable way to live. Just making money and letting it play out. It was great. All you have to do is just enter at the right time and enter with the right amount of money, and you could be very comfortable overall. But yeah, man, I appreciate you guys watching the video for this long. I hope this made sense. I hope you guys enjoyed. And yeah, please make sure to like, comment, subscribe, do all that good stuff. I hope you guys have a wonderful rest of your week, and I will see you guys bright and early tomorrow morning. Thank you. Have a good one.